I'm Ryan Mack. This is the Trading Guys. Today, I'm just going to run through what I use for data. So we have fundamental information, right? This kind of stuff that all comes through. It's kind of fundamental economic data. It shows you what you gain from this kind of stuff here, this data here, information, whatever you want to call it, right? The numbers, the news, the data, whatever. This tells you the strength of an economy, right? And by knowing if one is strong and one is weak, it gives you a higher probability if it's going to go up or going to come down, and so on and so forth. Bearing in mind that the whole thing with trading is that anything can happen. For example, you might be in an oil trade, which is absolutely flying. You go and make yourself a cup of tea. By the time you've came back, Iran has dropped a couple of drones in Israel, and oil has just absolutely went the complete 180 degrees opposite way from what you were in, right? Because anything can happen in trading. However, fundamental data is number one, right? And so what I use for number two, I'm just going to cover with you today. Where is it? Wrong one. Here we go. So, excuse me, there are many platforms you can use, okay? I use this one, which is called Prime Market Terminal. If you'd like to have a look at it, I will put a link below or above this video, depending on where you're watching it from. And you can just go through it yourself, right? So let me run through it now. I'll move my face out of the way. So here you will see we have all the currency pairs, right? You can do oil and gold and blah, blah, blah. You just type up here what you want. You can do stocks, indices. Excuse me, guys. You can do stocks, indices, whatever you want. It's all on here, right? Obviously, because I predominantly trade currencies, Forex, then I have this all listed here. If I want gold or oil, whatever else, I just type in here, oil, and it comes up right here, okay? If you want Apple stock, you can do stocks and so on. You also have the option to create many different templates, so you have many different layouts, okay? So let's just go through it. So let's say, for example, I'm not going to use GG because I use GG in every fucking example. So let's use something else. Let's use UJ. So let's just say, which is the case anyway, that the USD economy is really strong right now and the Japanese economy is very weak, okay? So that's the information we've got from fundamentals. We want to then cross-check that with data. Now, the data, this platform here, what they provide is, these platforms provide information as to what else is happening around the world in terms of seasonality. What you will find is that seasonally, there'll be months and times around the year where a particular currency pair, economy, pair, whatever you want to call it, is going up. It's predominantly buys and predominantly sells. And it's based over data from the last 20, 25 years. And you will find that there is always a pattern, right, for seasonality. This one here shows you volume, because we're in volume. Let's look at overview. This gives you an overview of the market. So what this does here, right, this takes on board loads of different types of information. It takes on board world news. It scans hundreds of news reports every day, week, and month to come up with this data, right? It scans bank reports, so you don't have to read them. If you want to read bank reports, you can read them up here, which I'll show you. I think it's, where are we? Files. You can read them up here in files. I'll show you them in a second anyway, don't worry. And it does loads of other stuff. For example, it takes into account what retail traders are doing. DXM means dumb money index, because retailers, they see it as dumb money that doesn't know what they're doing. And then you have here what's called COT, and I'll explain each as I go through them, okay? And it gives you a kind of overall score. So for now, it's bearing on the side of a sell, right? Now, overall, as the economy goes, you would never be selling UG right now. Never, right? If you are someone who's happy to do counter trend trades, then you absolutely can. But it's important to understand that, where is UG? The only reason why UG it appears to be melting right now is simply because the Bank of Japan are interfering. It's not because USD is now, the US economy is now weak and Japanese is now strong, which would make that melt. That is not the case. This is not a genuine economic move. This is simply a manipulation move. This is economic moves. This is all economic moves because the USD economy is far stronger than Japanese. Get back at a better price. Away we go. Blah blah blah. you would never buy this currency pair up here just now because it's way overvalued, right? Here's an example. If you bought a Rolex watch, let's say a Daytona or whatever, 2 years ago, you'd have paid about 29 grand for that watch, right? It was the highest price they'd ever been. If you try and buy that same watch now, or even worse, if you try and sell that same watch now, the one that you bought for 29 grand, you get about 17 grand for it. Why? Because if you bought it 2 years ago, it was way overvalued, way overpriced. All right. So it's kind of like that with USD just now. It is a buy economically, fundamentally. It is a buy. Why? Because everything is strong without going into it. Because I already cover this stuff in 100 other videos, right? So I don't want to keep repeating myself nonstop. So basically, the long and short of it is the US economy is still super strong right now. People can say, no, they're going to cut rates. They aren't cutting rates until it becomes weak. Once the economy's and all the numbers, CPI, PPI, GDP, blah, 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 starts becoming weak, then they'll start cutting numbers. But if you keep watching the news, these numbers keep coming in strong. So there's no rate cuts. They are not going to cut rates while everything is strong and going positively. Okay. So it's not going to come down for a while. It could be this month. It could be September. Nobody knows yet. You have to keep up to date with fundamentals, right? But you wouldn't sell this pair if you're a swing trader. I must add, if you are a swing trader like me, okay. If you're a scalp trader, intraday trader, you want to get in now and close in an hour's time. Of course you can, right? There's a million ways to trade. It's important to know I'm explaining swing trading. I don't care about jumping in for an hour. I would literally wait for 2 to 3 weeks for the market to hit here, or even better still, hit here, and ignore this whole move, enter here, and let it run for the next 6-7 weeks. That's what I would prefer to do, right, as a swing trader. I can't be arsed coming to the market every day, getting in here, getting out here, getting in here, getting out here, getting in here, getting out here. It's bullshit. Why would I waste my time doing that, right? Why would you waste your time doing that, right? It's more stressful. You've got more chance of losing money and blah, blah, blah. So once you've got the economic information that one economy is better than another, you would then come here and you can check through these various things, right? Volatility, market structure. This gives you loads of different stuff here. I'm going to show you. These areas here are key number points where a high area of volume has kicked in, right? And you can see, look, when a previous area of resistance has been broken, it then becomes the area of support, right? Boom. We always say that, and you can see it time and time and time again, okay? Previous area of resistance gets broken, becomes an area of support, right? Happens time and time again, guys. Again, that's a lesson for another day. You can check here, trend, the 1 week, the daily, blah, blah, blah. I won't bore you with this. This is just obviously basic stuff, right? But this is how this website helps you. I don't look at all of it. I really like seasonality, DXM, and COT. Those are the ones that I like. I don't really bother with the rest of it. Depending on how you trade will depend on what you look for, right? So it gives you a prediction of where the market should go. This looks fairly flat, but that's actually quite bullish in reality, okay? You can see here, look, seasonality prediction, boom. It's predicted to go up, and it tells you over the course of what date, by what, the 2nd of September, is that? 2nd of September, it's meant to be up. So if you get in now, blah, 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 right? Well, it's going to drop first. Tells you here, this is like today. It's going to come down, drop, and then rise. Seasonally, so the seasonality performance, I do quite like this. And it is very accurate, by the way, very accurate. Like everything in trading, it's not 100%. You might enter one that goes against you. That's just trading, right? But it is highly accurate is the point. So here you can see July for USD Japanese yen. Over the last 20 to 25 years, it has been known that July is a down month, maybe a month of correction. But you can see here in August is historically a month where this is a massive buy. Okay, now if we look here, considering what we've just been talking about, July, or even July here, what happens in August? So look, you've got July, first week in August, make some orders, second week in August, boom, August, buys, right? obviously that's just an idea, okay? But you get the point I'm trying to make, right? So let's come back to UJ in August, if you guys can remember this video, and let's see what it's done, right? But that's how it works. So again, right? You have to take everything with context. So you can't just look at this and be like, "Oh, July sells because this one seasonality thing says it sells. I'm going to jump in sales." You can't do that, guys. Right? You need to be able to incorporate fundamental, genuine economic data, information, what's going on now, blah blah blah. Our president's getting assassinated, all this kind of stuff. Is there wars going on and everything? CPI, unemployment, retail sales. You need to be able to look at all of this. Then you need to look at the data, this type of stuff, and you start adding to your bucket, right? You start adding all these little golden nuggets to your bucket. And then you come across the DXM. Traditionally, retail traders are always wrong. Like literally 80% of the time, retail traders are wrong, right? Let's wait for this to load up and I'll show you how we use this. So when it comes to retail traders, what you want to be doing is you want to be doing the opposite of what retail traders are doing, and you want to be doing the same or trading in line with the large institutions, right? DXM, Dumb Money Index, is retail traders. COT, Commitment of Traders, is the banks, JP Morgan, Goldman Sachs, all the big players, all the big hedge funds, all the big key players that make the market move, right? It's called Commitment of Traders. So what happens is every single Wednesday by law, all these massive organizations must submit all of the trades that they are currently in. And it gets updated every Wednesday. It then gets verified on a Thursday and posted out on a Friday to platforms like this that collects that type of data. And you can see where all the big banks are in. You can see if they're predominantly in sales, predominantly in buys. And look, this one's kind of 50-50. So I'll just show you a clearer pair. If we come across here, you can look at the date. Opened interest, you can see the banks have increased their long positions in USD. You can see they have also slightly increased their long positions on GPY. And you think, why would they increase their long positions if USD GPY is coming down? Because they're getting in a better value. They're just scaling in. They're hedging into their price, right? Because like you and I, we have the ability to jump in, bang 10 lots in here, 15 lots in here, 5 lots there, 25 lots here, and everything's fine, right? These guys are trading hundreds of millions of dollars. They can't just step into the market. The slippage, etc., alone in that would be phenomenal, right? It'd be ridiculous. So they have to scale in. Excuse me. Some people call it bracketing. Some people call it scaling in, and so on. It's the same thing, right? It's just different wording. So let's have a look at a pair. Let's look here. Look, pound CAD. So I already know the fundamentals off the top of my head without even checking the news and so on. Pound is strong, right? And the Canadian economy is dog shit, right? It's totally dog shit. So if we look here right now, let's go. Let's just start here because we're already here. If we look here right now, the banks are all in buys. I know they're not all. This is sells, this is buys, okay? So they're what, 75, 80% in buys, right? Let's have a look at retailers. Retailers are what, 94% in sales. Now think of it this way, retailers do not have enough liquidity to make the market move. If every single retail trader on the planet stop loss, right, was a 200k stop loss combined, we do not have enough money to move the market. It's a $7 trillion per day fucking market, right? We don't have enough money to move it. Who moves it? The fucking banks. If retailers are all in sales and the banks who have enough capital and volume to move the market are all in buys, what way do you think the market's going to fucking go, right? It's not rocket science, ladies and gents. Look, the banks have literally told you here they have increased their longs by 8,617 orders, right? You may see why is shorts increased as well, because they hedge. You have to remember, large organizations hedge, right? They have a certain amount of longs, a certain amount of shorts to balance the market out, but they will have one which is more heavier laden than the other. Hence why here you've got, this is the amount of short orders they're in, this is the amount of long orders they're in, because they always hedge it, always. They'll never just lump it 100% one way, because that would be catastrophe, right? Because anything can happen in the market. If anything happened outside of all these large organizations pushing it, like a war, somebody blowing up a pipeline, and blah blah blah, cows getting mad cow disease, and a whole, half of America's cows having to get killed with mad cow disease, and then fucking the price of meat skyrockets and blah blah blah. All these things have a crazy effect, right? Which we can't even begin to imagine until you start diving in to deep micro and macroeconomics. So this tool gives you all that information to help you, right? If you want to look at correlations and stuff, you can. I don't bother my arse looking at it. It's not something that I bother with, because sometimes too much information is just like bullshit baffles brains, right? It's a saying we used to all say in the army: bullshit baffles brains. If you want to baffle people, just tell them loads of shit that they don't need to know, and they'll just be like, oh yeah, okay, fantastic. Sometimes this takes a while to load up because it's just got so much bloody information on it. I don't use any of this stuff anyway, guys. It's not important. If you want to do range pattern, let's have a look at pattern. You can do that as well. Sometimes I have a look at it, but I don't. It's not necessary for my my trading method. My trading method is very simple. And here you go. You can look at patterns if you wish. Give you percentages if it's going to go up. What's the chance? It's 63% probability in one day that it's going to go up. Blah blah blah. All right. I don't bother with that stuff, but you can absolutely, right. And it tells you here the insight. What's the probabilities of going up? You've got your news here on the right hand side, your EMAs, and blah blah blah. Okay. Supply and demand areas are already marked up for you. Areas of volume. If you come to the volume segment, you can see where the volume kicked in right here, and there's another one down here. So right here, look, if you look, it tells you right there. There's what it is. Volume kicked in at 17147. So then you would implement that over to your chart. What are we on? What pair is this? GBP CAD. Okay, let's have a look. I'll show you how you would kind of drag that across and implement it right into your thing. What was that number? Where are we? 17123. So all I'm going to do here, just to make this easy, I'm just going to bang that there because it doesn't really matter. Double click. My 17123. There we go. Bosh. So what you'd then be looking for, that then tells you, right, to get rid of this. There's one I done earlier. Look, it just goes. If you're in our Discord group, I already gave this trade if you wanted to take it. Already gave this. Already gave, this area here. So all you're really waiting for, in my opinion, is when this is like coming down and stuff, right? I would just be ignoring that. I would not be touching this whatsoever. Wait. When it finally hits here, bang, away we go. That, in my opinion, is the trade that you're waiting for. It really is that simple. Honestly, it's that fucking simple. Obviously, yeah, please take into account that I am not just drawing lines on my fucking page here and saying the market's going to go there because I've drawn a line, Then it's not how it works, right? I'm basing these areas of interest, shall we call them, on cold hard data. And it's the fact that in this example, you would have to go and check and make sure that the British economy is still far stronger than the Canadian economy, right? Which won't be hard because the Canadian economy is dog shit. But you also have to check like oil prices, make sure oil's not flying. If it's flying, it gives strength to the Canadian dollar, which may, at that point, may push it down to here. So you have to take these things into consideration. All I'm saying is, if the market comes to here and shows you signs of rejection, the British economy is still far stronger. The Canadian economy is shit. Oil prices coming down and blah, blah, blah. You're like, okay, all the stars are aligning. You have so many confluences. You then come back over here and you check the COT and blah, blah, blah. And you look in COT are, 80 odd percent in buys, the retailers are all in sales. All of these things have just combined in this big, massive gold fucking nugget, right? And that's when you would then execute the trade, okay? Anything can happen. You could have a losing trade. However, these are high probability setups. If you were in our Discord group, where I not only teach all of this, I teach you the exact method. I'll show you it right now. I'll show you it. Look, in here, swing trade education, I teach you my exact method within 6 videos. In the space of 6 videos, I am able to teach you my exact method. Doesn't mean I'm able to teach you the fundamentals within that one video. I show you it all here and I break it all down. Yes, part 1 and part 2. Obviously, that's an ongoing process, and I actively teach you that each day, because it's not something that you're just going to watch that video and be like, oh, fucking hell, I understand fundamentals now. Of course you're not, right? It's an ongoing process. You need to put the work in, and there'll be times where you're like, oh, I get it, and you come back and you'll be like, why was that wrong? Look, this is strong and that's strong. Why was it wrong? And then you and I will jump on the charts and I'll do a 1-to-1 with you, and I'll show you, look, yes, it's higher. Yes, this is less. But if you look at the previous price, the previous numbers, and the current numbers, and you look at the consensus, they already predicted that it was going to be much less, and because it hit the prediction number that it was much less, you'll probably find that it was already priced in 1 or 2 months ago. And that's why the market either didn't move or it moved in the opposite direction to what you thought. And then you'll be like, oh, fuck, I get it. I never realized that. I just took it is very black and white. I looked at this number being high, this number being low, and I thought, oh, that should melt, but it went higher, It's because it was already priced in. And we cover that. So it's not as simple as just watching a fundamental video and being like, oh, yeah, I understand. There's a lot to it, and you have to digest it. You have to understand how to piece it all together, right? And we help you with that. So here is my swing trading videos. There's 6 of them. This one here is extra swing trading videos, right? What I actually done was, when I first done the videos, I made about 15, 20 videos, I think. And then as time progressed, I thought to myself, do you know what? You don't need 15 videos. I can compress and condense this down to literally 6 videos, and you will be able to understand what I do. We've got risk management, trade reviews every single day and week between myself and my business partner, Lee. Whenever we give trades, or even if we're just looking at setups, we will explain why here's explanation video, gold reviews. We'll explain why we're going to take a trade, and then you'll be able to know. You'll be able to, even if we're not in the charts, you could take the trade by yourself, because you already understand, look, if the market comes to here and does this, you can enter the trade, right? What else have we got? After we have been in successful trades, we then do another review. Whether it's been a losing trade or a winning trade, we review the whole thing from start to finish, and then we cover the reasons, what happened to make this a losing trade, what happened to make this a winning trade, and blah, blah, blah. And then you can learn, right? That's the whole point of it. Forex books, we've got tons of them if you want them. Forex psychology, these are just really good clips that we enjoy watching. And they do help with your psychology, so they're well worth watching. Signals, whenever we enter a trade, we tell you exactly what we're trading, right? So you can copy us at the same time. However, when it comes to my trading, because I trade a large managed account, right, for a large company account, I do all of my trading live in front of your face. So I jump on live on Discord. You guys can just click the button. You can jump on my live, and like you guys are seeing my screen right now, obviously this isn't my trading platform. When I'm trading, I will bring up my trading platform so you can see it, right in front of you. And I will take any trade that I'm about to take live in front of your face. Before we enter the trade, I will discuss with you, here's the reasons why we're entering it. We'll cover the fundamental news. We'll cover the kind of banking data, the software stuff, right, that we accumulate and combine it. Then we'll combine that with technical analysis, and then we'll take the trade. I'll explain why I'm entering here. I'll explain why my stop loss is going there, why my take profit is going here, and potential duration. Okay, lads, maybe we're looking to hold this for the next 10 to 14 days, and we give an explanation. I even say, if it gets to here and gives us a pullback, as long as the pullback comes to this area here and does not break it, we will actually use that pullback to scale in and add to the position, and so on and so forth, right? So I give you a full breakdown and full explanation, and you can ask me questions because it's all live. I don't mute anyone, so that you all have to listen to me and you're not allowed to speak to me and all that bullshit. You can all ask questions. You can ask me whatever you like, okay? And I will gladly run through it with you. For the last kind of 2 weeks, I haven't placed any currency pairs, right? Because they've all been absolutely shit based on what I look for, okay? The guys in the group have all been trading like pretty much every single day because my business partner, Lee, is a scalper. He's a phenomenal scalper, and he always gives 2 to 3 trades every day where the guys can make money, all right? As he has already done this morning, you can see. Let's see the trade results from today. Here's some today, 54 quid. Jevons, he has a small account. He's just practicing, which is absolutely fine. You can see we've got a varied 19 quid. Pat's 278. This is per day, by the way. This is not, this is not weekly or monthly. This is per day. These guys are making this money. Alex, 314. Alex again, 425. Pat's again, blah, blah, blah. That's Suresh, 114. That's me. So I haven't traded any currencies this last 2 weeks because I've just been shit. But I did trade oil. I got a nice little trade on oil, and it was up like 5.5 grand on that. I also gave that trade. Look, there we go. There it is right there. Oil sell limit order. So even before the trade came in, I actually gave it as a limit order. And everyone, I think we actually entered this trade on like the 26th of June. And the trade didn't actually come into effect until about the 1st or 2nd of July. And then it actually hit our sell limit order. And we were already in the trade automatically. So I didn't even have to give this trade instantly. I already gave this trade about 4 days before the trade actually took place. All right. And as you can see, it was a very nice trade. Okay. So that's it, guys. Look, if you want to come across and see what we do, experience what we teach, you can see that we're not bullshitters. And to put our money where our mouth is, we offer you an entire month completely free trial. Completely free. Full access. You can watch all our videos. You can read whatever books you want. You can jump on a live chat. You can copy our trades and make money. And that's it. You get an entire month to try us out to see if we are bullshitters, because I know there's fucking plenty of them out there, or if we are the real deal. All right. So we like to put our money where our mouth is, and we do that for you. And if you should decide at the end of that month that you do wish to be a part of us, we only charge £97 a month, and that includes everything. Daily mentorships, education, one-to-ones. I do not charge anything extra to do one-to-ones. All this week, I've been offering people, lads, I'm here today. There's no trades for my method. Do you want to do one-to-ones? We can run through examples. I'll tell you, right, pretend we're going to sell this pair. Show me where you would enter and tell me why you would enter, and I run through scenarios with them all and I correct them. Yes, you're correct. No, you're wrong. This is why, blah, blah, blah. Okay. Look, we have reviews here, student reviews. If you want, I won't thing me on these, but if you want to like screenshot this and zoom in and have a read, whatever, by all means, feel free. Here is other ones. Look, here's ones here. This is Suresh. If you want to screenshot that so you can read it later, by all means, crack on. Jevons again. There we go. All right. So that's us, guys. I will put the link below or above, depending on which social media platform you're watching this from. And stay tuned. Every week I put out a weekly review, like every Saturday, Sunday, for the week ahead. So I may post that to YouTube for you guys. All right. Have a great weekend. Take care. Bye-bye.